We're back with
Hi,
another
Dan.
NAC episode. Welcome, Peter. First time guest on NAC. This is our second guest actually on NAC. What's on your radar right now in this current market cycle? We're bleeding the fuck out over here.
Yeah.
Everyone's dying.
Success.
Yes. What is on your corporate success?
I'm pretty happy about it, to be honest. It's like last time we had such a major double dip, I would say both for macro and crypto, we got all-time highs, pretty soon after, 10 months later. I'm not saying it's gonna happen this day. I'm definitely by no means, right? But um what I'm saying is that, generally speaking, the analogy I've been using is that the sun rises and sets whether people understand the physics behind it or not. I think people love to sort of, you know, people sort of think that like there's this sort of cause and effect, and then like how, and the better that works out, the better you could rationalize it. But in reality, I think markets play along the cycles of fear and greed, and I think that's as simple as it is. We're peak fear right now, and people want safety. People want cash, stables, Bitcoin, if anything. Alts are dead. This was exactly the same spot the market was at in early to mid 2020. Yeah, actually, yeah, early 2020. People forget that in 19 we went through a similar
Yeah.
cycle where it was actually a lot of pump and dumps on BSC. Fundamentals were dead, and at that time, most of the I would say market leaders and cycle leaders of 2021 were basically clamoring and fighting an incredibly uphill battle for any sort of attention. No one cared about Uniswap. No one cared about OpenSea and NFTs. No one cared about Axie Infinity with games. They were all out there marketing the asses off, trying to get people to care about anything of the things they were building. While at the same time, the sentiment was this is the new normal of macro. There's incredible instability of COVID. We've never seen this before. At the same time, we've seen, crypto's just a scam. We just had this massive, insider sort of pump and dump cycle where no new net inflows happened. It came into crypto. It was just internal capital rotating. Alts are dead. Alts didn't really move. All these ICO and Dino coins back then, were never gonna rise ever again, right? And fundamentals were dead. I think I at least at this point, I've seen everything that everyone is saying right now or have said over the last couple of months, I've heard before. It is nothing new, and to me, it just means that the story is progressing. The sun is whatever daylight cycle it is. To me, it just signifies that there's progress, and I think usually it's a little hard to tell if the top of a market cycle. I think it's like pretty easy or like far more straightforward to identify what peak fear is, and yeah, I've always like lived by the rule of like the moment people think it's a new normal, it usually means like the pendulum's about to swing the other way, and it's a lot of internalized learnings passing on my end over the years. Things around how sentiment is just is ephemeral, and I think again, going back to the analogy, sort of sun rises and sets, whether you can rationalize it or not, right? And so that would be like my view of the space, and I think yeah, it's classic, buy the blood, get out of majors. At least that's been the investment view and directional view I've had since the recent correction. Is that at least like at least speaking from a liquid investment perspective, is that you actually want to be smart about obviously the TWAPs that in which you run into risk out of stables or majors, but there's you can't control selling the top, you can't control selling the bottom. I mean, I'm buying the bottom, but the one thing that you can control is to be allocated when no one else is, and to run the other way when everyone else is, a little overparalyzed with fear, right? And I can point to a lot of other, I think I would say like uh, cognitive dissonance points that the market has, in the sense that alts are dead. At least it's popular sentiment that alts are dead, but barely 6 to 9 months ago we had an alt rally in early 24. No one was complaining alts were dead then, and 6 to 9 months was not that long ago. So I just think that like there's a overcorrection in sentiment, and that is the alpha, right? And when people are being a little irrational, so that's Yeah.
Why do you think there's that overcorrection in sentiment, even though I would argue a lot of the fundamentals are better than they've ever been? Like what's happening in people's brains, or a ton of investors' brains, that's like causing such a wild overcorrection in some businesses?
It's just it's fear, you know. When you're capital allocated, you're on your last clip of capital, and let's say you're an investor who's often gone with momentum. It's you just you're playing it safe. Why take the risk, right? Why allocate when no one else is, right? So maybe you can just be a little quicker than others on the draw when things pick back up, right? I think that is the status quo across um most pools of capital right now, or investors. And I think in reality too, for venture funds, most funds raised majority of the capital in 21/22. They're on the last leg of capital. They're being incredibly conservative, but at the same time, I think that's sort of the mind killer with venture too. Venture, you're looking for outsized outcomes. You're looking for the outliers that can really grow and perform, not safety. And I think a lot of investors have just been investing either, I think, under the guise of two things, right? One, a sense of safety secured by a sense of fundamentals, which I think is nuanced there, but but also two, investors who are just following along the momentum of a lot of market manipulated coins, who seem to be overperforming, but are mostly just the core team TWAPing in, OTC proceeds, while some of them getting out OTC themselves at the same time, which is straight up crime, right? But so I think there's a lot of fear. People hold on to the jobs. It's I think a lot of investors, there's the investor class grew a lot in 21, 22, 2020, arguably, right? And a lot of people, yeah, are sort of operating from a position of fear. And I
Mm-hmm.
don't believe that you can be a great investor and operate from a position of fear. I think you have to operate with eyes wide open and simply, be smart about taking the counterparty of, not the counterparty, but taking counter-cyclical risk.
I get, like, my question. There's four founders on this call, on this podcast. A lot of founders listen to this. What would be your advice to founders in terms of building in these market conditions? Like, top pieces of advice.
Fuck the noise.
Don't waste any fucking time begging VCs for money. Uh, they're not going to invest in you, and they're all kind of a bunch of pussies right now. They're not going to take any forward looking position, and if they do have capital, then a lost clip of capital, right? This is a generalization, but I think generally speaking, this would be my advice. And the follow up point would be, instead of spending that time on fundraising at early stages or pre-PMF, spend all of it as much as you can on building a community in which you can crowdfund from or generate revenue from, even better. And today, I would say, yeah, you have a lot of green lights, from the regulatory perspective, to go and crowdfund, run mints, launch tokens early, and go and take that path of permissionless innovation, right? Like, you don't have to be gated by these checks of capital. And I think that if you build a strong community, a strong audience, show traction and attention, capital will follow. Great investors pay attention, strong communities, and social momentum. This is what you want to build first and foremost. And then if it happens that investors start reaching out, chatting to you, great. You can raise along the way, but build that community, run mints, launch tokens early, or crowdfund via Echo, Legion, etc. Um, don't depend on. I'm just like not a fan of like sort of placing such a great weight on investors, for the livelihood. Even though, yes, it's like because I think it's a little bit of a behavioral pattern learned from like the 21 era, where venture was so abundant, you needed any capital, we just went to investors. And I think that even let's say crypto recovers a little bit, I do think venture in general will never reach the heights of 2021 ever again. That was peak mania. We saw 0% interest rates. At this point, we just hope most people, from a macro perspective, just hope it goes down, let alone ever hit zero ever again, right? So, and a lot of the LPs have been burned significantly by venture funds, right? That have been chasing paper gains, not producing DPI. I do think venture very healthily has overcorrected, but I do think as a crutch, you really want to be avoiding that, right? And revenue. I think besides obviously not like raising from community and having removing private investors as a dependency. I think that it's all about getting to default alive. Like it's get to revenue, get to some level of ramen profitability, and then figure out what is the play then on out, especially for crypto consumer, like teams building on the application layer, because I think we might not be building the end game from a venture outcome perspective. Like it's getting to profitability is not the sexiest thing, but you might not be a venture scale outcome today. But once you get to a position of stability, you might then be able to then work on that big swing. You have time to figure out product market fit, because I think there are a lot of teams that, are depending on sort of like narrative like pivots, right? To sort of like keep raising capital and survive. But I think in reality, sort of unless you're raising money, you're sort of basically finding success for two ways. One is more temporary in the sense that you release a product, it generates speculatory attention, you make some fees off a speculative hype cycle, maybe you start it, and maybe that's good for a while, but that's not true PMF, right? That's not long lasting oftentimes. You have to, maybe you aim for, you try to build a market that doesn't exist before, and then it goes through some market cycles, you grow some revenue, and maybe then you try to, it buys you time to figure out how you build a product with long-lasting PMF that has retention, that has revenue retention too, and that has the right type of funnels, right? The right UA channels that, and just, I think building products for PMF on the consumer side take, 5 to 7 years and at least 10, 20 million bucks, right? And it's okay if you don't get there in the first 4-year leg of your journey, but how do you get to a position that affords you that journey? Because most just die out, along the way. And I think I sort of like, I've heard this being this coin before of like, where someone is, it's sort of like, I've got the term, but it's when someone is so smart they're stupid. Or it's like teams and founders sometimes get a little too smart for their own good, where they sort of aim for the moon, they get halfway and they suffocate, from the lack of oxygen and runway. I think you have to aim for positions interim, and I think this is like obviously grain of salt. There are companies and projects where they are incredibly capital intensive, and if you can keep raising and you can take the full swing, I do think that there is like sort of this argument for the era of MVPs are over to some degree. People want craftsmanship, people want good storytelling, people want that Steve Jobs-esque launch, and people want to be wowed, right? So like I can definitely, I'm definitely not saying skip on this, and I definitely see the cases where you have to go the full mile, but it goes ship that Apple 1 and then Apple 2 is that commercial success that gets you to swing at everything else after, right? So this is a very long rant. Sorry, guys.
No, I'll tell you what, I really resonate with what
Make
you
money.
said, particularly for like building Bello before we transition to Blueprint, is raising a pre-seed round and allocating all that money to figure out what PMF could look like on like a B2B SaaS level, and getting contracts with good names, but feeling too comfortable in that position to end up building something that doesn't have the proper PMF, to then actually being in a place where you don't have that much money left and you have to cut a lot of things and scrape your knees on the floor to really cut your salary, like really give up on a lot of like these luxurious things that came with raising around, and really like put it to the test to see what works and get to ramen level profitability. And frankly, I think that was the biggest gift that could have ever happened to this company, because it completely changed my perspective of a founder and how I approach building product and how I approach building a business as a whole. So I resonate with that so much. And I feel like a lot of other founders that would be listening to this episode are maybe stuck in like the VC hole. And I've been there chasing VCs. And now it's like, I actually don't want to chase VCs unless they come to me, unless I actually build something meaningful that actually creates a significant amount of value that people organically latch onto. So I resonate with that so much. It's so like, I don't know. It's so nice to hear that from another perspective, because sometimes you're just running in this hole for God knows how long, and you don't take a minute to like pop your head out to breathe for a second. I feel like all of us could kind of agree to that sentiment to some degree.
Yeah, I want to plus one that because I think we explored the venture route again, this past year, and it just wasn't there. And we've been, entirely focused on like the profitability, the ramen level profitability, and we're pretty much there, Peter. I think the hard part is right now is that we're so focused on this ramen profitability, as you're saying, that it's hard to shift your focus to that big swing, because without that profitability, you're almost dying. So I guess I'm curious, what's your perspective there? How are you supposed to take those big swings when you're just trying to, make ends meet, every month and trying to generate, revenue and profitability and all that stuff? Do you have any follow up there?
In reality, if I had to be really, really honest, you kind of get lucky. The market grows, market share grows, demand grows, and you then pour everything you can to capture as much of that as possible, show momentum and growth, and justify, either generate revenue and grow off that or raise off that. And you have to play the cards that you're dealt. But I do think that, as much as we like to think of, consumer crypto as being sort of totally removed from the market, accepting ignored by the market for the most part, right? Like, I do believe that, most consumer crypto companies are, building platforms for consumers that involve some sort of digital asset, right? Whether it be tokens, coins, NFTs, or anything in between. And I do believe that like a lot of cultural assets, especially NFTs, let's say, sort of represent and sort of exist on the furthest fringe of what is perceived as value in crypto today, right? And you can sort of think of it as like concentric circles of perceived value, right? At the center is Bitcoin. If you do you believe Bitcoin is valuable or not? It's sort of like a binary yes or no. And if no, you're a no coiner. You don't believe in crypto. But if you believe in Bitcoin, you might just believe in a programmable ledger, maybe Ethereum. If you believe in Ethereum, you might just believe in L2s or Solana, right? That trades performance for security, right? And you can sort of like you can sort of seal the rings of perceived value out to the edges. And I would say the consensus around the value of Bitcoin, simply its price to a large degree, oscillates heavily, right? So in a period where Bitcoin is growing, it's a bull market. People are very good at extrapolating. Hey, if this is valuable, if a punk is valuable, maybe what else could be valuable? What else can I perceive as value, even in the slightest sense, right? And perception of value draws people in, maybe even not for hyper speculatory reasons, right? Maybe even for the idea that I own a collectible or an additional piece of art that someone else finds valuable, and that this is worth collecting, even owning. That's it. That might be the difference between someone caring and not caring about a piece of media that is collectible, right? And so I think that I think it's consumer crypto companies in the spot. It's all about growing and figuring out okay, how do you get to ramen profitability, but also thinking about where will we see market growth, and once the market does expand, and once if not, maybe how do you engineer that demand too, right? And onboard new cohorts and new audiences as crypto, because usually at some point the world looks inwards and they sort of think, I was late to this. Can I get involved with Y, right? And usually the world looks inwards. Usually people funnel in of all sorts of shapes and colors and classes and trades and crafts, right? And the biggest question, the most important question is, once a market grows, how much of that can you capture? Can you capture the majority of that? Can you grow with the market, right? Can you outcompete others to some degree, right? I think that's the most important thing, more so than what is the market share, what is the size of the the market today, and how much do you have of it today, right? I think you know the ability to capture market growth is the number one determinant factor of like who's the future winner here. So I think a little bit of luck, a little bit of planning, a little bit of anticipation, right? But also the recognition that, a lot of crypto, its fate is still being decided. It's fluctuating, and I wouldn't, um, I would plan for, I would survive when it's dark and gloomy, but I would plan, right, for when it is bright and things
Yeah.
are moving quicker, when the market is growing, when there is the demand is, growing.
I think that's a beautiful transition into, markets are growing, or, ideally you're operating in a market that is growing. A market that's not growing right now is NFTs, and we are very much NFT boys here. So what's the current take on NFTs and where they stand? Are they coming back as like PFPs? Are they coming in a different form factor? How are you guys thinking about NFTs as a whole right now at 1KX?
Yeah, when people ask me what I'm focusing on, it's sort of like jokingly say like gaming, NFTs, and like everything. It's just like creator, like maybe social, right? And sort of like it's like a half joke. And I think in reality, like yes, I do think that um, regarding NFTs, going back to the analogy, right, of like this concentric circle of like perceived value, I do think that yeah, if you look at law cycle, this concentric circle of value was expanding, it discovered NFTs along the way, and expanded to the point where we even where the market found it places attention to even I would say further fringe assets, even or fringier NFTs or digital assets, even like music, right, or even beyond, right, and I think that uh, if I just had to look at when the market was sort of a little bit like nicer and kind to everyone, let's say mid to late 2024, I think we saw the expansion of that perceived value, right? People traded punks once again. People traded PFPs. Sort of the art market picked up briefly. And I do believe that, going back to the sun, sun rising and then setting analogy, having been around NFTs before they were even valuable at all, playing with digital art, playing with, collectibles, I think that, I think it's a little simplistic of me to say that, I think people will find interest in NFTs once again, except I think the gap in the market is, how do you build products around digital assets and digital artifacts that sort of dampen the cyclical nature of this like, contraction and expansion, this financial cycle, right? That influences sort of interest, amongst consumers, right? And I do think that, the far, the, the better the products can be from a pure consumptive point of view, the more you're able to go to market, without a financial sort of value prop, right? The more intrinsic motivations you can sort of resonate with, and then acquire more users, et cetera, right? So I sort of think that like it's going to take us a bit to build, I would say, consumer crypto products that are fully cycle, independent. But I think the first step of this journey, this cycle, is going to be how do you build products that simply take a step away from the sheer violence that is crypto speculation, hyper-financialization, right? Because the lows are low and the highs are high, right? But you can't, it's incredibly difficult to navigate financial cycles, being fully dependent on something that is so volatile, right? So that's been my like general like thesis for crypto consumers, that, it's sort of like we have we have inherent sins, right? Like wrath slash violence. We have like greed. We have sloth. We have lust. No one ever says they're a fan of violence. But if you sort of take two guys fighting each other, take them from the streets to an octagon, slap some logos around a cage, televise it, and sell it to people. People may then just call themselves like a combat sports fan, right? And so like story like matters a lot, framing matters a lot, social permeability of the form factor matters a ton, right? And so no one ever says openly disclaims how much and sort of like brags about how much porn they watch, right? They like no one ever does. I think like lust and the consumption of pornography and the current state of crypto is very similar. It's just so raw and violent that it's not socially permeable, right? Just like raw violences or smut content might be, right? It's equally raw. But if you see some random dude on the subway scrolling his TikTok past like first trap content, you don't bat an eye. That stuff is everywhere, on Instagram, on TikTok, on Twitter. You kind of like, you're working and you just see like the worst piece of like like OnlyFans content or like borderline pornography on your Twitter, and you just like kind of like brush past it. You sort of know that's the algo feeding you what it is, right? I mean, definitely that's the experience with dudes. Like if you're a guy on the internet, like whether you admit it or not, right? And so that's been my analogy, is that crypto needs form factors with that can deliver ultimately a speculative experience in a consumptive friendly way, a socially acceptable way, socially permeable way, right? I inherently think that everyone loves to speculate, anticipate. Everyone loves anticipation. Everyone loves having a favorite team. Everyone loves surprise. Everyone loves to feel kinship or have skin in the game. These are universal elements, but I think the derivative of the core emotion that is ownership slash a buzzword for greed to some extent at the rawest form, right? So I like to think that this is the challenge: is how do you build products that ultimately capture the desire to speculate, anticipate, to belong, to own, to bet, while in a way that is actually socially permeable. I think like that's why I like collecting as a story, right, to tell, patronage, but also at the idea that you can have liquidity, you can earn money here, right? And maybe the other analogies, even the idea like to compare sort of like speculation with the idea of employment too, right? So that everyone has a job to some extent, right? And everyone usually needs to work for a living, but how what you work on, how you work really matters, at least for those that are fortunate, right? But let's say even for your dream job, you probably wouldn't do it if you had your pay cut by 95% minus except founders, obviously, right? I think like most people in consulting or high paid positions, even though they love it, you slash the income by 50-80%, they probably not do the job. I think very similarly to like the parallel of speculation is people are probably here in Web3 to make money, but how they earn it matters. How they're perceived by the rest of the world matters. What they're earning with matters to people, and who they're benefiting also matters, right? And the more intrinsically driven this is, the more sustainable and the less volatile it is. And I think also the more socially permeable it is, because if you just rerun pump fund all over again without any of the same, without guardrails, I would say you're going to end up with pump fund and LA Vape Cabal and sort of Hayden all over again, except it's going to be a bunch of Williamsburg hipsters scamming each other. Like it's just I think that is the you're just replicating the same game on a smaller scale, perhaps, right? But I do think that this is sort of design space. It's not about okay, just like calling it quits and saying like, okay, hyper financialize everything without a care. I don't think it's about like just using the blockchain to settle stable coins. I think that's I'm sure there's like they are financial and like consumer services that are going to find build great businesses off that. But I think from a consumer entertainment standpoint, there's a lot of companies completely ignoring the affordances of what people actually care about on the blockchain and what makes people feel something, right? So I think this is, again, like rant number 5 I'm just dropping here, but of what I think is interesting, but also the tension, right, between the tension to sort of walk here.
I think the word social permeability stands out to me here. I think one trend that I've been noticing a lot recently is the flight to Pokemon cards and the culture that's developed around that in the recent months. And I think that there's something really telling about that because everyone loves Pokemon cards. Kids played it when they were younger. Everyone likes the idea of opening a pack, but it's also something that has high upside potential too. And so I think for me, it's kind of like, how do you build crypto products that embody that same spirit of Pokemon, where a kid would want to buy a pack for $5 just for the fun of opening it, but then you have these like sweaty 40-year-old dudes rushing the vending machines in Walmarts to buy every new pack that comes out because there's like a secondary market around the collectibles. And so at least on our end, the way we've been approaching it now is, I understand how much degeneracy drives crypto behavior, crypto native behavior. I don't think that same level of degeneracy speaks to real music fans. I think when I try and talk about coins and tokens to artists and to music fans and market caps and everything like that, it's still just too early for that. But I do think that there is a world where someone would like to buy something for $1 and then get an offer for 10 on it. I don't think that that's a crypto person that's going to get excited about that. But the question to me is, how do you basically build a foundation that speaks to someone who is familiar with crypto and understands the dynamics at play, but then can also translate to a real person as well? And unfortunately, that requires a very differentiated point of view as a product builder. And so I think all of us collectively are in this limbo zone where revenue is being generated by crypto natives, scalability and venture scale outcomes come from real people. How do you balance your operations in such a way that you're not sacrificing revenue today for a demographic of users that's not currently here, but that we hope will be here tomorrow?
Yeah, it's a tough position if you're really forced to go after purely the crypto native, right? And I think that that's okay. You got to do what you got to do, to make revenue, to experiment if you truly think that's worth going after, right? I think like no one has the right answers, but to your point, consumer is never really that different to some extent, right? Like, different technologies, different platforms, but fundamentally, people care about making new connections with others. People care about, experiencing things that they would never experience before, or heightened experiences, right? People care about connecting with others, right? Or supporting others, right? Like these are pretty universal, or getting laid, right? Like, or getting employed. I think these are like, these are the things that drive the world, that drove the adoption of the internet before. Things like status, right? Like I'd throw that in there, definitely, right? Like, and it's all about how do you leverage this new crypto / on-chain primitives to draw out new emotions, or heightened ones, right? To further this.
I think tying back to the NFT conversation before, like status is something that NFTs did really well in the 2020 to 2022. And there are a lot of reasons that don't exist now why NFTs were able to fill that status void. But I do think that in this, whatever this next iteration is, refilling that void and filling it in a way that is going to matter to more people is very much a clear use case for NFTs and digital collectibles, but no one has quite figured out how to fill it post the like PFP craze and digital art craze. And I'm curious, like, if anybody has like thoughts on what that is, and if that as the primary thesis for digital collectibles also makes sense.
I mean, the primary thesis for pods has always been around the social graph that you create when you collect a specific piece of content, and how you can leverage that social graph for discovery or rewards or engaging with those audience members. So I definitely agree with that. I just think the tooling there isn't there yet right now, but I think making progress. And it was kind of interesting that like NFTs kind of filled this hole kind of naturally just through the 10K limited supply kind of craze. But yeah, it was a really interesting kind of thing to pop up with the NFT cycle, was that status symbol of having a punk or having an ape at its peak. And even now having a punk is still relatively high status, whereas maybe an ape has dropped in status, which I think is just interesting. Whoa,
you're talking to David here. Right?
I didn't mean to bring it.
Look,
come on,
an ape. Don't make me cry too much. Okay.
Should have sold it, David.
No, but I also think that the to Peter's point about concentric rings, if the ring expands, the status needs to be more accessible. And I think that what has not happened yet that I still believe will happen is that there can be status for owning something that costs $50, $100. And I keep coming back to Pokemon cards. I just think it's so relevant, but it's like people are pulling a pack and they spend $5 in the pack, maybe $10 in the pack, and they pull a $60 card and they flex that on Twitter that they got this pool of something that's rare. And it's not like it's life-changing amount of money, but it's up a significant premium from what they originally spent on it. And now they feel a level of status with that.
Yeah.
And that contributes to a wider game.
Yeah, I think the status isn't limited to just financial. Like in
No.
a pod like scenario, you could just be like, I'm the earliest supporter and I've been supporting every single episode and I've collected every single episode. And that's not necessarily super financial, but very social in that sense of like, I'm just there all the time.
Where I get tripped up though, well, I agree with the Pokemon example, is it's also being built off IP that took decades to build. And there's no on-chain native company currently that has had decades to build IP with that kind of value, regardless of the collectible attached to it. So is a company, I mean, I think about this with Hume all the time, right? Like we're creating original IP. Is there a way to speed run that process where your IP can actually become more popular and bigger faster than it in a shorter time frame than it took IP to grow in the past? And in 2021, 22, there was kind of a clear it seemed like there was a clear way to be able to do that. And now it's a little hazier if there's a way to shorten that time frame. But do we need on-chain native IP that is massive in order to have a Pokemon-like collectible experience that really is fully like a crypto native experience?
I think the answer is yes, but I don't think you can speedrun it drastically. And I think that the reason why, Adam, I'd actually say you fall into this camp too, is like existing IP being brought on chain actually has a lot of potential in this regard because it's had the legacy of being created for many years prior to it actually having this like collectible layer on top of it. So I think for someone like Hume, obviously you guys can go faster on making that happen, but it does take, to Peter's point, 5 to 7 years of building a consumer product for it to be able to have real legs. The same holds true for the IP itself. You can catch a bid and be like hot in a hot market of NFTs, but your IP is not going to last if there's no underlying foundation or community to build around. And I think that's what we're seeing now is like the reality of the reach of these communities and these IPs, where from the outside looking in, most of them are just cringe now. And even though a lot of these companies are working on getting more eyeballs and impressions and whatnot, there's not a desire from real people to wear that status in the same way they are with like, again, just coming back to Pokemon cards, something like that. Like no one's got a Charizard as a kid with crypto native IP. Like we haven't even gotten close to that level yet. And I think it will require that amount of upbringing with these IPs for there to be that level of status associated with collecting it.
The caveat being, I would add, is that, it depends on the demographic. Usually like IP grows the fastest in fandom. Usually it usually like happens more frequently the earlier and the younger you go, because they don't have that frame of reference, right? Like, kids who are part of the, like 6 to 9-year-olds didn't care that Skippy Toilet existed barely 6 months ago, right? Like they just like watched it and like found it funny. So, I think like it's relative on the demographic you're going after. And obviously that comes with like spend and trade-offs and virality, network effects, et cetera, right? But
this is my biggest like concern with crypto right now as a whole, though, is that the demographic is misaligned with the market that I think all of us on this call are going for, which is to say, I mean, I'm going to speak for myself personally. Like I want to go after a younger demographic. I want to go after college kids and people who are just coming into music for the first time. And when you go to ETH Denver, there's no fucking college kids there anymore. You know what I mean?
So this is something that I've always like my perspective is that you can't ignore crypto natives, but yes, they are not the future and end game. You have to leverage crypto natives and crypto native liquidity and attention to create a market. But once you instantiate that market, there's effectively a ticking timer in which you have to then take that market to. You have to basically go to market with what you have there to a completely different audience. And the example I would use is would be Axie Infinity, right? They built a crypto native following off a bunch of NFTs, built a game, created a crypto native economy around SLP, the Axie, and AXS. And once they got that to a reasonable amount of scale, they then were able to, they got a little lucky and were able to find PMF in a completely different audience. Some were, actually pretty close in the Philippines from Vietnam, right? So, and I sort of replay that like over and over again, thinking that, I truly believe that they would never have found PMF there if they weren't able to go to market with an economy that you could earn from, find scale with. And obviously you can sort of critique, how things fell apart afterwards, right? But I think it's a sign of like, you want to basically build quick PMF crypto natively, you build liquidity, you build depth, but you've got to take that elsewhere. And you got to make something else of it, right? Otherwise, this liquidity, this attention is just fickle, right? It moves on.
I was going to add like a quick aside here too. Chevy, you want to get something in there first? I can save my point if needed.
No, I just think I'm just piecing together what you guys are saying and thinking about how I'm doing it at Blueprint. And like we have all these incentives and we have like a demand side that we've been building and using other distribution to drive mints. And now we've been using traditional creator influencer databases to reach out to trad creators based off their content type and based off their audience size to try to bring them into Blueprint and launch these campaigns and frame them as like these loyalty programs versus as like you're going viral traditionally on chain. So I'm just like, it's like it goes back to the $10 million liquidity, $1 billion fully diluted. The brains are turning, that's where my head's at right now. But go ahead, Coop.
I was just going to add that this is where I think that groups like LA Vape Cabal are really net positive to crypto. And we don't have to go super down this rabbit hole here, but I think the way in which they were presenting their content to a wider audience was actually very entertaining for a younger demographic. And so everyone wants to get mad and say, oh, they dumped on everyone, meme coins are terrible, etc. But I'm like, who else is going and getting content, crypto content in front of new people? And it's the younger class of people on Twitter who are making short form video content, who are going live on Twitch, who are doing all of these content formats that younger people resonate with now. And I think we need a lot more of it. And I think in a lot of ways, like outside of the meme coin trading, we haven't seen short form content be able to connect with the younger audience. And I'm happy that people are starting to do that more now, but I think that we need a lot more of that if we want to reach this younger demographic of users in the first place.
I think we just need new haircuts.
That's really what it comes down
Paper
to.
fade, and we're dialed in.
We're all getting the mod haircut for the next episode. We're gonna look like Gen Z guys. We're gonna have a little puff in the front.
I
That's
think
what's gonna
David
happen.
would look
I'm
real
gonna
good.
get a. I'm gonna get
I
a
can already
perm,
see it.
Yeah, it's gonna. It's like
But
the
also-
Avatar. It's like that. The kid from Avatar 2 or 3. Like I'm not sure you guys watched that movie. It was like they had this Gen Z kid that had like the perm and everything. It was like an alien though. Like. Anyways.
Pretty good.
Shout out Avatar. Also, though, I think that like I don't know if we on this call are the people who will be able to speak most effectively to these younger demographics. Something that I've been thinking a lot more about is like delegating marketing to people who are more in those circles on a day-to-day basis. Like I don't know if people like want to see Jesse talking about base. You know what I mean? Like maybe that's not like the archetype of the person that's going to resonate with them. I think it's really helpful as a founder-led marketing initiative, but like the way that a chain like Base or Abstract or any of these chains probably gets people to use them is by like paying influencers who are like actually desired to consume their content by these younger demographics. So I don't know. I just think that to kind of round it back, I've been spending way more time in the music camp these days than the crypto camp. My whole life, professional life, I've spent like 80% of my time in the crypto camp, 20% outside of crypto. And now it's the opposite, where it's like 80% in music, 20% in crypto. And it's really started to change my perspective on how I look at the crypto space in a very like, I just see it. I feel like I see it a lot more clearly, like the way in which people look at crypto now from the outside and the stereotypes they have and the connotations they have and whatnot. When I was so insulated in the culture, I was almost like offended that these archetypes existed. But now when I look at it from the outside, I'm like, oh, it actually makes a lot of sense that like maybe there's not a lot of cool stuff happening here. Like maybe you don't want to spend time here if you're like 21 and right out of college. And I mean, David, we talked about this last week, I think, but like maybe there's too many builders. Like maybe there's way too many builders and not enough just like regular people. And that's not a good thing, you know?
We got too many builders. Oh man.
There was for a long time, crypto felt upstream from internet culture, and now it feels like downstream from internet culture. And I think that's been a big shift. And then I don't remember who, somebody tweeted this the other day about how like the AI narratives are going so fast, and it's actually the first time that there's a industry that's not crypto that actually feels like it's moving faster than crypto. Like I think part of the reason a lot of people get into crypto is because it attracts people who are interested in many different subject matters. And it also attracts people who like to move really quickly and feel innovation and see progress happen on an exponential scale. And I think a lot of people are starting to get that fix, even from like a lot of like the classic crypto Twitter people are now getting that feeling out of AI. And this model got updated, and this model got updated, and this model got updated, and I got to follow this one, and I have to start using this. And it's the first time I think in a while that there's an industry outside of crypto that gives that intangible, feeding the ADD-ness of everybody in this industry feeling.
I don't think it's productive. Nothing gets done during those periods anyways. So, and these periods don't last, right? And they do oscillate. I would also add that, like, I would also, like, I think, like, maybe, like, underline with the fact that globally it's been a pretty, it's like the global macroeconomy has been pretty depressed since 2021 still. Global consumer spend is massively down. No one has money to spend. And I think that is a big factor that could be dampening a lot of interest with crypto in general. Even if you're abstracting a lot of it, even if you're building the right products to some extent, you know, even traditional consumer markets such as games outside of crypto, right, is struggling because people just don't have money to spend and to pay for things and to buy, right? And so I can see that you know, the vacuum that, you know, that it's left is you know, technological innovation driven by AI that doesn't require money, but rather a lot of time, perhaps, right? It's a new shiny technology, which, you know, makes sense. But I think, you know, crypto is ultimately a consumptive market, right? It's gonna mirror the consumptive patterns of the rest of the world, and it's gonna, you know, it's gonna, you know, sort of come and go with the supply of money and with the rates too, right? So I wouldn't disagree that there's like this ADD buzz somewhere else. It's usually not the most productive period fundamentally in general, right? But you know, I think it's about digital assets. We're selling virtual goods to a large extent, right? And it's okay, you know, if this demand is dampened and alongside, you know, the fact that the very question of Bitcoin is in challenge right now. And first, if Bitcoin's existence is being challenged with, you know, in the current period with prices moving up and down, there's extreme volatility. You know, it makes sense that if you're building fringe, you know, like highly, you know, sort of, you know, frontier assets, digital assets, however you package them, yeah, you know, along, you know, these two sort of main factors coincide of probably not a lot of demand for the time being, right? So I always think about like the perspectives, so, like what is happening right now, and in context of market cycles, right? And
yeah. I mean, I think my like simple take is that it's effectively just a QT versus QE question. And the past 2-3 years, we've been in a quantitative tightening phase, and we're just kind of waiting for that lower interest rates, money printer to go on, and I think the fun will resume.
But the pain will not end unless you build products that retain better,
right?
That engage better, that people further out on the spectrum outside of crypto will enjoy, engage with, fuck with, right? Like actually care about. And it's kind of like been the crutch a little, is that the market cycles come in and saves everyone by the bell, but it's actually, you know, does, you know, the whole space does take a step back as a result too.
100%. All right. Unfortunately, I think this is all the time that we got right now. I apologize for cutting this short, but Peter, thank you so much for coming on. I think we all appreciated your insights as an investor at 1KX, as 4 consumer founders trying to navigate our way through this. So thank you very much for coming on. We'll definitely have to have you again. For everyone else, if you're still listening, you can collect this episode at pods.media/not-a-cartel. Maybe we're going to do something interesting at some point with it. I think we are. I think we got some plans.
I think it's happening.
But we'll see.
We'll see.
All right, guys.
Awesome.
Thank you, Peter.
Thanks for having me.
Thank you so much.
Thank you, Peter.
Yeah.
Thank you guys.
Awesome.